What's going on, traders from the inner circle, and welcome to a new trade recap of today's Euro USD trade, which was a 12.8 risk reward. Completely nice trade at the end. Unfortunately, I closed it a little bit too early. Yesterday, I explained you my strategy with 20R, so look at this. Also here, it would have been very nice if I would have been holding it till 20 hours, so exactly to the peak, So I'm not sure why this works so often so good. So probably this is why I love 20R and I don't want to go for 30 or 40 or 50 hours. I'm not a big fan of it to get so big risk reward trades because it's simply not good for me, for my mindset. This is what I worked out throughout the last couple of months. So whenever I'm trying to get that one big risk reward, for a 1 to 80, 1 to 100 and stuff like this, I will just lose it at the end with a break even or even a stop loss hit, as I'm not a big fan of moving my stop loss into break even. But yeah, let's stay at this trade. So why did I enter this trade? Why did I choose this demand zone? Why not the other one here below? I guess, Nikita, you've been asking me why I did not use the other demand zone. I'm going to explain to you in this video very detailed, and I hope that this will help a lot of you to understand the way on how we're trading here in the inner circle. So first of all, super important is, let's make a full breakdown analysis, to understand the daily time frame, because yeah, it's bearish. Of course, EURUSD is bearish, so this is not a secret. This kind of thing is just dropping currently like hell, and the idea is that, of course, every drop will go back and will give us some potential correction. In this case, this is our range, not really relevant in this case for our setup, to be honest, but everything will have at some point an end, every single drop, and it will give us something, it will give us some sort of reactions, and the reaction will come from some levels. And the levels where we can expect some reactions, I determined them already yesterday and the trade recap from yesterday, and I mapped out some demand zones on the 4-hour time frame. And this is what brought me to the price to give us something. In the first place, we need to understand here below this kind of thing is liquidity, okay? That's what we need to determine first. Whenever we expect something, especially on a higher time frame, when a price is bearish like this, if you would like to get a counter trend, then you need liquidity, And in this case, this liquidity is sell side liquidity, which means it will be used for the market to use it to sell even more positions so that it will just be absorbed. What we wanted to see is when we would like to go for a long, then we would like to see something like this. So we are in the middle of nowhere. Even better, we are below this weekly structural point. So everything speaks right now into our favor that yes, why not? Let's have a look for a nice buying opportunity. But you need to understand then that we need also something here. So you need some level of demand in order to come into this trade, And what's interesting about this structure here is that if you go to the monthly time frame, you will see that we have here monthly level of demand. Now we're not there yet, but this is definitely the target for the Euro USD. Switching to the weekly time frame, you will also not see anything here. You just see, yeah, there is liquidity because we tap right now finally below this higher low. Going to the daily, you will not see nothing. But going down to the 4 hours, and this is where the kind of thing is going to be interesting. And here we had some level of demand. And it wasn't this case. Of course, this one was a level of demand, but this is not a valid more because it already was mitigated there. So we are not going to use this one. But we have this one, So you got here this demand zone, and this is that one which the price at the end used to come into it, So this is what I explained already yesterday. And this is the first thing, to understand that this is the weekly level of demand. Then you come down here checking out the minute 15. And on the minute 15, you will see, yes, I can refine it a little bit. You can refine it till this. This is good. Or what you can do as well is to just use the wicks. And then you're just checking, because in this case, everything here is liquidity because it swept this here previous. You had your equal lows, price perfectly swept that liquidity, and from here it broke structure successfully. So for me, this is definitely a valid demand zone. Okay, now you can see how this kind of thing right now, just refining to the wicks, will just lead automatically in splitting it into parts, the whole demand zone. So this is why that one makes always sense to even just adapt this kind of thing. So if you don't want to analyze it too exactly how I'm doing it, so I love doing it like this because I'm always trying to really understand where the whole liquidity is and where it makes sense that the price will come into it. So definitely this one is a minute 15 demand, which is more powerful than this one, so the whole block, because you have here a more refined kind of thing. So if the price will tap into here, you definitely need to keep an eye on it. So let's go back to see where the price at the end really tapped into it. And as you can see, it tapped perfectly, perfectly into this refined minute 15 demand zone. And that was all that I wanted to see for my setups in order to really look for a long opportunity. So this one I don't need. I only need the minute 15. Plus, what I've seen was nice liquidity, so that's definitely something which you want to see, especially if you are in such a strong downtrend. You would like to see a little bit more proper confirmations for your setups. The only thing in this case which spoke against us was this range, and this is why I was willing to close my trade very early, because we've been here in this range, so this till this here. So that's why I thought about, okay, when I'm going to get here my price action confirmation, then, which is obviously an accumulation phase, guys, Wyckoff accumulation, perfect example, then I would like to close it here because potentially price will respect it and will bring it all the way to the downside. Of course, what speaks against is this, because you are here, you're creating here a ton of liquidity, and this whole thing here will be probably an accumulation phase, but we don't know it yet, so we need to have further confirmation. The best one will be, price going up higher like this. Right now we broke it currently, so that is right now definitely the more valid confirmation for us that we would like to see price going bullish. And right now, look at this, tapped into the minute 15 demand and already reacting like hell. So probably we would have been seeing here a pretty nice opportunity. To be honest, not for me. So I don't have right now any confirmations for this long currently here to really type to get here into an entry, as I just have here a big imbalance. Probably the price will even come back down right now very soon. But yeah, not interesting for us right now for this video. It's Friday, I don't like to get involved at 4 o'clock on Friday. I just want to close my trades and to make some party, to do a little party, because it's weekend, here for the trade, just to map this out. So that was my range for my setup. So I didn't use it right now like this. So let me use this, and let's go back to the past to see and follow the price action. So what I seen was nice liquidity. You can call it inducement. I like to use also the word inducement sometimes, just because I see so many traders out there, on Instagram, always trying to tell you right now that inducement is something different. More than likely, inducement is just another word for liquidity. It will be just used, look at this, price is moving like this and it's creating that inducement, and price is grabbing that inducement and it gave you a reaction, and look at this, pretty nice, it closed above it, it closed above this previous lower high. So for me, this kind of thing completely changed. And now here the most important part why I choose that one demand zone. You need to always check out all time frames, guys. Not only the 1 minute. I'm executing on the 1 minute, yes, but I'm always watching the minute 5 as well. As for me, the minute 5 is a very important time frame. So on the minute 5, we didn't have a break, but we had a break right over there. And what is interesting about the whole thing right now, what the market has given us, and that's what I mapped out in my analysis as well, was here a mitigation of the minute 5 demand zone. So that demand zone, which closed perfectly above on the 1 minute time frame, has confirmed currently that we're bullish. So on a 1 minute, you can use this demand zone, which is mitigated here. Okay, guys, quick break. My MacBook just shut down, so I've lost right now the recording, so I'm going to just continue right now. The point was here at this demand zone. I just explained to you that it's a little bit tricky on one, because you always need to view a demand zone as a range. So I'm going to upload a new video for that one as well, where I'm going to explain you more about supply demand advanced stuff, which could help you here out. But just looking at this demand zone, you can see that you can use this whole range, or you're just using the more refined thing. And if you look at the refined one, then yes, obviously this will be liquidity for the market, so that it will be our additional confirmation that the price will tap into it here to take this long trade. But the thing is, if you look on the minute 5, then you will see that you are using here. So if I'm mapping out right now this, you can see by checking out the minute 5 that we're already using this. Oh, sorry, wrong one. So if you come here and you're using this and you're switching to the minute 5, you're using already a refined demand zone of the minute 5, because the minute 5 will be the whole area right over there, and what the price is doing, it already mitigated it. So this is why it's important to also check out the minute 5 time frame, because this will allow you to not make so much mistakes by don't knowing which supply demand you should use, or you're just risking it, on both position. So that would have been my idea if I would have been stopped out by using this demand zone. Then I would have been looking immediately to take this one as well, because it's obviously ton of liquidity if you will take out this higher low here as well. So my analysis says this is my demand, and we have mitigated it here fully. So I'm going to use here this new created demand zone, and I'm waiting here for price to come and to tap into it, because we have here a lot of liquidity, so we had here a ton of liquidity. So of course I want to see price going here to take it. And then I'm just waiting, I'm just placing very simply here my buy limit, and I'm just waiting. Then price is coming, and boom, it's taking out here liquidity. So at that point, your setup is not invalid. Of course, it depends what it will do now, but what it is doing is it's taking out this liquidity, but it's not mitigating the demand zone right over there. So let's wait a little bit to see what the price is doing, and no. So it's not mitigating here anything. In this case, you could use also here the more the whole range, this, and you see that price didn't tap into it. If in this case we would have been seeing right now price tapped into this demand zone, then for me the whole setup would be invalid, and I would not trade it anymore, as I would have viewed it as valid mitigation, and then I would have been using here very easy here the charge thing, and I would just enter the setup right over there at the new demand zone. That's what I've been doing instead if price would have been hitting right now my whole demand range over there. But this is what the price did not. So I will still hold it, and I will mark this as my additional confirmation. This is even more saucy, more saucy the setup, because you got even more liquidity right now, because it's already using the previous higher low. It's going up, it's breaking structure. So the whole retailers are just looking to get here involved in their long position, and then we know price will go down. We know it will go down, and this is why I placed right over there my buy limit, and I was just waiting for price to come into it, to grab it, and boom, it was bullish. And here, guys, there was no need to wait for any charge or anything else, guys. Of course not, because your whole confirmation is here. Your whole story is here, So let's go back. Let's understand this. Price is moving here, step by step, creating these higher lows, So it's fully mitigating everything on the minute 5, fully mitigating it on the minute 1. This is for me also full mitigated. It starts even here. This is the first mitigation, second mitigation, third mitigation. So we've been waiting for the third mitigation, because it's the next one, which needs to come into place. So you're just going step by step, like you're walking the stairs up, This is how you're doing. First step, second one, third one, and so on. So this is the structure. This is what we need to follow. And we know that between these ranges, the market can do whatever he would like to do, So this is why it was even here an additional confirmation for us that what the price did here was just a trap to grab this liquidity, so that it's creating this one in order to tap down over there. And we know price can do within a range. In this case, this was the range, whatever he wants. Can come back down, can go back up, and come back down. As long as not everything is fully mitigated, we can still expect price to do this. Of course, not always the price will do this. Sometimes it will just not do it, but still we need to wait for that, And yeah, that's basically the whole setup. I closed it just because there was here minute 15 range, as I explained to you already. So it made a lot of sense that it will come, that it will give us at least a reaction. What I did, and this is something which I missed, equal highs over there. So more easier would have been if I would have been, or more logic would have been if I would have been putting my take profit exactly there. What the price did is it is moving even higher. It's taking additional liquidity from above. So what you can expect if price is taking out so much liquidity, so everything here, whole area here, whole area's liquidity, whole trend line here, it's taking out the whole trend line. This for us also additional confirmation. Price will grab this. You can go short. You can watch for the market here, break of structure. You have your supply zone, and you're just waiting for price to return, and you can just jump on this trade. Price is already providing you here liquidity perfectly, and go. Price is dropping lower. And then again, you have a new supply chain here, new supply. Let's wait for that one. You went lower. You broke structure here. You broke structure there. Let's go. Same kind of thing, just repeating the opposite. Okay, of course it needs to make sense. In this case, it's what speaks against the whole setup here is very easy. It's because we tapped into 4-level demand after such a big drop to the downside. So of course it would make sense if price will just generate right now here additional liquidity, like this right now, probably even giving us a reaction from it, and then moving on bullish, because price on the minute 15 is bullish. We broke everything to the upside. We had here a clean BOS. Okay, so the BOS actually occurred there, but it's a clean BOS. And what the price did here is it tapped into this demand zone. So I'm more bullish right now. So I would wait right now to be bullish. So we're moving here. The same kind of structure is moving up. From my point of view, the only problem is right now, so this is fully, in this case, it's good. This demand zone is mitigated. Right now you can look for this. So let's check out the minute 5 here as well. So it's definitely this one, which I want to see right now, price fully mitigating it. It did not, but it mitigated the range, so it's not necessary that it will come back down. And this one is also still available, so you got currently 2 demands on possibilities here, and this one here could be easy victim to the lower demand, and the lower demand always makes more sense. Problem is right now, if the price will come lower like this, then you have your equal lows. So this is why I'm not that interested in this anymore. Okay, so always reflect everything what the price is giving you and make your decision according to them. And here again, this is, in this case, could be a full mitigated demand zone because price already tapped into this range, and these ranges are what are just another demand zone on a higher time frame. So here, very obvious minute 15 demand zone is on the minute 1 a huge range, and this is why we are refining them, because we would like to get the tightest stop loss possible for our trade setups. Okay, that's basically it for today's video. Hopefully you enjoyed it, and I would say we're going to see in the chats, and on Sunday again 6 o'clock at night, Austria time, Zoom call as always. See you guys. Bye bye. And I wish you a very great weekend and make a lot of party, guys. Okay, bye bye.